So you don't really need more assistance, a lot of assistance to do what you need to do. So that's why I create the website, to give you the tools. And once you already understand the tools, you can always do the analysis yourself. You don't really need anybody, to teach you how it is. That's why I also gave you a highly beneficial tool, very professional, my personal approach to the market. That's why I put it all on the website for you. That being said, today's webinar, I haven't planned anything. This is me being totally honest. So it will go mainly on what you suggest or recommend that I do a review about. So if you have any assets that you want me to look into, please post that into the chart, and we'll look into that right now, and we'll do some analysis. If you don't have anything specific you would like me to look into, then what I can do is I can pick out a few assets and do an analysis on them, and then see how it goes. Okay. There's a few things. I mean, gold, normally this period of the year, if you're familiar with the trend of gold normally goes up around this period of the year, and the move is already happening. That being said, if you're able to catch the move up until September, you'll benefit a lot from it. You'll benefit a lot from it, and you don't really need to trade much. Just one trade will be sufficient enough for you. Okay, GBP JPY. Okay, I'll look into that. Before I look into that, let me just pop into gold quickly for a second. Let me go. Let's go look at gold for a second. So currently, I don't know if you guys have, if you have a position in gold. I have. No, let me check. I have a few positions in gold. Just gonna check out that. Yeah, I have 4 positions in gold at the moment. I grabbed my entry at 1.1737.30. Yeah, that's why I grabbed my entry. So somewhere below. That's why I grabbed my entry in gold. Because I have the tools, so I just already knew what's going to happen. And just paid attention. Okay. Gold, GBP, JPY, US 30. I don't think we have US 30, but I have Euro, US. They have everything else that you pointed out. US 30, we might possibly include it into next year's update on the website on the seasonality, but currently right now we don't have that. So in gold, basically around this period, July period, gold tends to start going up and spiking all the way till September. Now the problem is gold didn't start this move earlier this year. It started to move quite late. So if we look at it, gold started to move on the 21st instead. Instead of starting it somewhere around here on the 6th. So it literally went down. So it's been less predictable this year, but nevertheless, the up move is going despite the war that is still, being pulled on and on and on. But if you really look at it, this move is most likely going to last till September. So if you're able to grab a position, you'll be well off. That being said, to grab a position here is going to be slightly tricky because you might have to wait a little bit till next month if you haven't gotten a position. But if you're someone that already knows what you're doing and you have your own personal analysis, then you might just find a good time to go in and grab that. So that's just what I wanted to look at. I just wanted to point out that we're in the seasonal move of gold, and this move is most likely going to last till September. So if you're able to get it, you might be able to ride the entire rodeo. I've been riding from somewhere around here, I think. I can't remember. I called the figure out earlier anyway. I have it on my phone. I think I've been riding from here, but I'm looking to take maybe my first profit around here, about 1,000 pips. Fingers crossed, maybe before September, gold gets somewhere, higher than that. Gets here, in which case By the way, I'm using my laptop direct. I'm not using my screen. I just took it with me when I traveled, so it's gonna be a bit funky um, when I'm doing the analysis. So yeah, so I'll probably not be able to grab 2,200 pips, but if you're able to get in, I suggest, most likely market will probably pull back to around 20 EMA or somewhere slightly below it. And if you can grab that move, that's good. But sometimes what I've noticed with gold is when gold starts its move, it want to pull back in some cases. So you have to find a balance for yourself. Now let's go to today's analysis. Let's look at off the bat. We got, well, okay, there's quite a few. So we look at GBP. Okay, let me just put them right here. So the drill is the same. Everything is always the same every time. It gets boring, but it is what it is. That's how you make money. Sometimes making money gets boring. So just repeating the same thing over and over again. So far, I'm looking at just the assets that everybody's pointing out. Funny enough, most of these assets you're pointing out is mostly the entire assets on the site. So it's kind of like me doing an entire analysis of what the market for you. I do encourage everybody though, if you get time, get the tools. The tools are online on the website. If you don't know the website, it's on the Telegram chat room. At the top is pinned there somewhere. Sometimes some messages might have covered it, but just go through it. You'll eventually find it. The website is business.damonpark.co.uk, and this is exactly how to use the tool. This is exactly how I use the tool anyway. So disclaimer, I notice I don't really do the disclaimer that much, but I put it always in the description on YouTube when I upload this. In no sense am I saying you should take the trades. It's up to you how you feel about them, and I do encourage that you do your own analysis. So I'm not saying, I know everything about the market, but I'm just only portraying my own personal idea of what I feel, could most likely happen in the market. I'm not right every time. I get it right most of the time. Nevertheless, though, I just have to put this out there to, make sure that that whatever trade that you see here is based on your own concessions. You have to do your own research and you have to come to your own conclusion before you take any trade. So I just want to get that out there, get that out of the way. So that being said, let's start. Let's look at GBP first. So what we do, my approach to the market for anybody that is new, I'm not sure if I have new guys here, but if you're new, there's something called COT report. Basically, COT report shows you what the commercials and non-commercials are doing. Commercials are people like, they use this assets, maybe Euro, for example. They need to buy, someone in the States wants to buy something in UK or within EU, for example, and they need euros because they don't spend euros in their country, they spend USD, they have to buy a euro. So they're not really looking to make money off of the exchange, they're just buying the euros so they can buy whatever the goods they want to buy. And vice versa, if somebody's in Europe and when you buy something in America, you buy the USD just to buy something. Everybody knows the idea of world exchange, right? You sending money to Western Union, that's what they do. So these guys are not really looking to make money off the price fluctuation like we do. They're not looking to trade like that, but they need that money to carry out their business activities. So we tend to follow those guys because one, they don't really care about what happens in the market in regards to going up and down. They're not inclined to make money from it. And two, they do their research thoroughly because they have access to more information that we do, inside information, because their notion is not to make money off of the market. So they're just doing it for their business to run. So they have information that we do not have. Because we try to make money off of the market, the information that we have kind of limited. So it doesn't create inside trading kind of stuff. So basically we decide to follow those guys because they have more information than we do, and their information is basically what we use to make our assessment. Now, the main reason they publish these information is because these guys, based on Freedom of Information Act, they have to publish everything that they're doing, also to avoid market manipulation. So the trick here is to follow what they're doing and make our own decisions based on what they're doing. So we follow them, and most of the times they're mostly right. let's see, they're mostly right. So and what they're in their analysis, that's why we follow them. So just opening up. And I don't know if you hear my laptop going back and forth. I put it on the platform right here, so just rocking back and forth whenever I move my hand. Whenever I move around. So bear with me if you hear that. If you don't, that's perfect. So first things first, what I'm looking at right here is Euro. Now the Euro CO2 report. This was the one that came out last week. And what we need to focus on is just the commercials. And we focus on the changes that's happened around the commercials. Now, long means buy, short means sell. You know, that's basically what it is. And we want to see if they're buying or if they're selling. Currently, right now, Euro, they're taking out positions from their overall buy positions, and they're taking out positions from their overall short positions. The only thing we focus on is the changes. The main reason I focus on the changes is because I want to see what they recently did. If they did something recently, I want to be inclined to move with that recent move. So what's happening right here is they're taking out positions from the long and the short side, which means currently right now, it's kind of like a confused scenario. They're not really, doing anything new. They're just taking out positions. So for that reason, Euro would not be in play for me. I wouldn't be looking at any Euro assets for now. Just making Euro my primary base. So we'll look at other assets. Let's look at AUD. Same thing goes for AUD. They're not doing anything. So what we do is we come off, delete that off. The next thing we're looking at here is CAD. They're selling CAD. They added positions into their CAD shorts. That's what we do. CAD, we're going short. Now, a lot of people might be wondering, okay, why are you just looking at one asset? If I know CAD is going short, it's going to be weak. So if I know that I want to trade USD CAD, for example, I'm most likely going to buy USD CAD because I know CAD is going to be weak. If I'm trading CAD JPY, for example, I'm most likely going to be selling CAD JPY because I know CAD is going to be weak. Same thing goes for GBP CAD as well. If I know CAD is going to be weak, I'm going to be buying GBP CAD. So that's why I look at one at a time, segmented it. So the next thing is USD. They're selling USD as well. Now, for those guys that know, when USD tends to go down, gold tends to go up. It's kind of like they have the inverse correlation. So this is a good sign for us already on gold. So they're selling CAD. And the next thing is JPY. They're not doing anything with JPY. Delete that. And GBP, they're not doing anything with GBP. We delete that. So far out of the entire asset that we've looked at, we've seen USD going short, CAD going short. So most likely those two assets are going to be weak. I haven't checked gold. Let me see what they're saying on gold. I already grabbed my position. That's why I'm not really looking into gold. Gold seems confused at the moment. I wouldn't recommend getting a new position at the moment on gold. But if you know what you're doing and you're extremely skilled, be my guest, crack on with it. Now, the next thing we check is after we check the COT, we check the seasonality. So seasonality is basically based on seasons. We have, in the UK, we have 4 seasons: winter, autumn, summer, and spring. Regardless of what part of the world you are, there's seasons. And in most companies, there's 4 quarters anyway. Quarter 1, 2, 3, 4. So basically, at each quarter, business they perform differently. So seasonality helps us break that down and allow us to see which quarter over a period of time, how does the asset perform? And that's where this sort of graph comes into play. So it breaks down throughout the years. So we have the 47 years, 15 years, and the 5 years, and it breaks that all down into 365 days. So the 47 years, for example, for a 47 years period, we'll be breaking down into 365 days, checking the pattern over 47 years, giving us the average price movement over that period of time. As you can see, in gold tends to go up around March 13 most of the time from the 5 years, previous 5 years data. And then, around July as well, gold tends to start going up in July. And then December as well, gold tends to start going up in December. So basically, I really focus on the big moves. I don't really focus on in between small consolidations like this now. I look for big moves going down or big moves going up. Those are the things I look for. If everything looks like it's consolidation, I just leave that assets. I go make money somewhere else. I run my other businesses and make money. Or if you work, you go to work, you make money. So that's what you do. If you have the opportunity, when the opportunity arises, you just pick up on that opportunity. And once the opportunity is done, you say thank you to the market, take your money, walk away, and go do something else. When a new opportunity comes, you do it. But if you want to be trading the market every single day, trust me, you're going to be stressed out. And you're going to most likely end up losing more money than you would make. Most people that trade the market every day lose. I said most people, I didn't say whole. Just most people that trade every day, they lose. So let's check USD. Let's check the USD seasonality and CAD seasonality. Let's see. I think we still have a little bit of time. So, right. Let's see what the USD seasonality is saying. Now, for those guys that deals with correlation, you already know. I said this already before. USD most likely goes down. Gold is most likely going to go up. That's what's going to happen. So right now in USD, it's showing that it's going to drop from in July. I don't know. I can't remember if I looked at any USD asset recently or traded any recently because I'm currently on gold. But if you've seen a drop in USD, it's most likely because of the season. If the drop didn't happen, then something didn't align with the commercials. So, but if it happened, most likely it's because of the season. So right now we're about to pick up August. Now, what we can see here is from the second, you're most likely going to have a little bit of fall. And then from the 38 and the 15 years, USD is most likely going to start rising from the third till about the 11th. But the problem is the 5 years does not align with that. Now, if the 5 years does not align with that move, what I tend to do is I just tend to, ignore it. It becomes a riskier trade. I want everything to align. If one is saying down, the other one has to say down, and the third one also has to say down. If two are telling me up and one is telling me down, that's already giving me a higher risk trade vibe. So it's up to you how you want to do it. If you feel like you want to trade with the higher risk, I mean, you can simply just ignore it. Take this and ignore 5 years and just pay attention to this too. But keep in mind, if you do that, you're trading on a higher risk, in which case, that's going to be dangerous. But in this scenario, it can't apply to us anyway because we know USD from the commercial is going short. But this is telling us to go long. It's telling us to buy from the third. Now, there's this few days right here from the first all the way to the third, which the 15 years seems to be showing that it's going to go down. But as I said, I want bigger moves. I don't want small moves. So for that reason, I'm not going to trade USD asset, which leaves me. I'm just going to move over to CAD with seasonality to see if we can find an alignment. Now, if you don't find an alignment, it's all good. Just let the market be for that week. You don't have to trade the market for that week. Save your money. Keep it for the weeks that you have alignment. And when you have alignment in those weeks, take the shot. So next thing we see is CAD. So CAD shows is going to drop from the third all the way, and all three aligns all the way to the 7th. Now, we know CAD is already saying short right there, so we take USD away from the equation. USD away from this equation. So I still have to go third, 0, 7. Oh, what did I start? Third to 7th, right? So, and if you don't know how I came up with that, all I did was I just looked at this part and see where all three align. All three align on the third, and that drop goes all the way to the 7th. Now, this is another type of big moves I'm talking about. It's just like a very small one. But if you want to trade the market, you can just quickly take those small moves. So third, all the way to 7th, which is Sunday. So you can trade this from Wednesday all the way to Friday. And it might be a little bit bumpy, but most likely it's going to go down. So third to the 7th on seasonality, we're going short. Now, there's the last thing called probability, and this was designed. This is actually designed by me and a few other people. And probability basically gives us a percentage of win on specific days of the year. So I have the probability for this entire year. It shows me days that we have 100%, days that we have 50%, and all of that, you know. And I tend to go in. The market is more like a big casino. Yeah, I don't know if you've noticed, but it's like a big casino. You put money in, and in some cases, some people hope to make money. Some people go there with strategy to make money, and some people just go there to have fun. You know, you don't want to be the person hoping to make money, neither do you want to go there to be the person just trying to have fun, because you end up losing. Just when you go to casino, you know, you're gonna end up losing if you keep playing for a very long time and you don't have a strategy. You know, unless you're counting cards or you're gaming the system, you know, then you're gonna make money. But in most casino games, some of them are tipped in your favor. None of them is actually tipped in your favor. You know, most of them are tipped in the house favor. So sometimes the house has 52%, 51%, 53%, you know, but that 53, 51, 52%, trust me, over time, if you're playing, if you're just, you know, what's it called? If you're throwing a penny up and you're doing heads or tails, if you have 53% in your chance and someone has 47%, if you play 100 games, you're going to win. So basically, this is going to give us what we need. Right. Okay, that's beautiful. So high impact news this week. That's beautiful. From CAD as well on Friday. That's good. If the high impact news is coming on Friday and you're really making money from Wednesday, Thursday, I would suggest moving your stop loss into profit. Once you're ready to profit, moving into profit. And so just in case if you know market pulls back, you end up taking profit and not taking loss. You know, that's another thing you have to put into your strategy. A lot of people say don't trade with stop loss. Some people say it's foolish to trade without stop loss. I don't know which one you should do. Whichever one seems comfortable for you should go. But my recommendation is always have a stop loss. You know, unless you have unlimited funds and you don't really mind, you can trade without a stop loss. I doubt if you have unlimited funds, you know, you would want to trade the market every single time. Okay, so what I'm going to do is from this one asset that we got right here, CAD, that looks aligned on the seasonality and COT, what we can then do is we can look at all the assets we currently have on probability on CAD. There's about 7 of them, if I'm not mistaken. And what we'll do is we'll look at those assets and then, and then see which one is best for us to trade. So currently right now, we only know that CAD is most likely going to drop. We don't know which of the CAD, if it's GBP, GBP CAD or CAD JPY or USD CAD. You know, we don't know. Euro CAD, we don't know which one. So this will give us the best option once we know the probability of win on that asset. So we're looking to start trading on the 3rd. So anything above 50% for us to trade on the 3rd to the 7th. If we have 3 days going 50% in our favor, then that's the asset we're going to trade. If not, we just let it go and let it be. So CAD CHF, we have 56% on the 3rd, but then 48%. So we have a better chance to trade on Wednesday, but then shortly after, our chances goes down to 48%. For that reason, CAD CHF I will not touch. Next, let's see CAD JPY. The same principle applies. If it doesn't go in your favor, you know, I might have mixed it up a little bit. I'm looking for, apologies, I think I messed something up right here. We're looking to sell CAD, not buy. Yeah, so basically CAD CHF on this day, on the 3rd, we have 56% chance to buy. But what we're looking to do is sell CAD CHF. So your best option to actually trade this is we can't trade it on this day, on the 3rd, or you might trade it at the end of the day on the 3rd, or when you can find a week on the 3rd. But your best option would be on the 4th on this one. So we can actually still trade this. CAD CHF, that will be short on the 4th. So 7, right? I think so. Up to 6. Right, that's the first one. Right, let's get that out of the way. So the next one is CAD JPY going down again. Let me mistake that. So on the third, it gives us 56% chance, but immediately after 70% against us, and then 74% our way. Me, I like it to be 3 days straight. You know, that's my preference, because I've seen over time when it's 3 days straight in my favor, I tend to win that trade more than I lose it. So that reason, let CAD go. Next thing is Euro CAD. In this session, we're looking to buy Euro because CAD will be dropping. So on the third, we have a 41% chance of buying, 48% chance of buying, which is not good for us. We want it above 50. Casino rules. By the way, that's not strategy saying casino rules, by the way. It's just something I just made up right now. So basically what we do in August is, August the 4th is actually going into this and come out on August 5th, because we have those 2 days in line in our favor. Normally 3 days. The longer the days, the better it is for you, basically. CAD go, same thing, literally, same as this. And when I say short, it just means sell. Sell, but in this case, we'll buy long. So remember, CAD is going short, and if it's going short, Euro CAD will be going long, because CAD is going short. CAD came before CHF, so that's going to be short. Sometimes, it's easy to mix up. So USD CAD, even though we're not trading USD, we're looking for that move coming from what's it called, CAD going short. So the same principle applies here. USD CAD, the same principles applies to Euro applies to this. So what we can do is USD CAD, and next thing is GBP CAD. By the way, if you have questions, just type it up in the comment section. I'll be able to answer it. So the next thing is GBP CAD, because we're expecting GBP to go long and CAD to drop. So this will not be ideal for us. It gives us 50-50, but then 38 and 54%. So just let that go. And the next thing is AUD. So with AUD, NZD CAD, next one is NZD CAD. So with NZD, we actually have it a day before. So I would say if you're not busy on this day, you can come and be looking at NZD CAD and probably find an entry. If you can't, just wait till the third. So NZD CAD is the one that's giving us the third entry that we're looking for. So, but you can see just from that one asset, one CAD asset, we can actually pinpoint 4 or 5 trades from it. And by also doing this, we've actually calculated, I think, over 32 assets simultaneously. We're just looking at those individuals. Maybe not up to 32 in this instance, but very close to over 20-something assets already. So next thing to do is AUD CAD. We're expecting that to also go long, but that goes down here, up here, down here. So for that reason, there's no go right there. So what we have left is these 4 trades. So I can check NZD CAD and let's see if I can find. Let's see if I can do technical. We still have like 7 minutes left. I don't have it up here. See if I can find. So with NZD CAD, there's a last tool called Williams spread, and Williams spread literally tends to move before the market moves. In most cases, it's not all the time, but in most cases it works. I find it works about 70% of the time for me anyway. In which, if it points in a specific direction, most likely the price moves in that direction. If it points away from that direction, then most likely price is going to move away from that direction. So currently, right now, it's pointing up. And the Williams spread is pointing up. And because the market has been consolidated, I do not really enjoy trading the market that has been consolidating before and going, up around it. To me, it's risky because the market could just be stuck in that consolidation. But for this reason, I could still recommend trading it, but it's going to be a medium risk. So therefore, this trade will be classified as medium risk. Now, you see, we've done 3 different procedures, and even at that, the best we can get this trade at is medium risk, because if one of your indicators fail, that's medium. If 2 fails, that's high risk. If 3 fails, don't even trade it. So we have COT pointing in that direction, seasonality pointing in that direction, probability pointing in that direction. But William is also pointing in that direction, those 4. But because the market has been consolidating prior to this, I tend to move it to medium risk trade immediately, because once market consolidated, in my experience of trading the market, it's very difficult sometimes for the market to pull out on that consolidation. It's very easy for it to snap back into that consolidation, creating more pockets of liquidity. So for that reason, I'll classify this trade as medium risk. Now, for the guys asking me, so where will my entry be? I don't really give entry zones, but this is where you start employing your trade lines and all that stuff. Since you know the date, keep in mind, that, okay, I'm only going into this trade on Wednesday or possibly on Tuesday. So what you need to do is when Wednesday come or Tuesday come, you can go on a 4-hour time frame, for example, and just draw your line. Draw your trend line, for example, let's say here, and if it's on Tuesday, you just wait for price to hit that trend line or go above. Now, to be the safest when you trade this asset, I would say you wait for price to go above your 200 EMA, then it's above your 50 and 20 EMA, and then when price comes back to retest any of them, then you grab your entry, and then you put your stop loss behind the last EMA. But to be the safest, you put your stop loss at your ATR value. So ATR value is just, you can get ATR from going to insert indicators, average true range. And I leave mine at 14 period anyway. So ATR value is 35 pips. So if it's telling you to put your stop loss at 35 pips, just times it by 1.5, whichever figures it gives you, I presume in this one will be like maybe 50 something pips. That's where your stop loss should be. So if you're trading the market and price is above 200, for example, it comes back and hit the 200 moving average, put your stop loss at 55 pips away. Let's say somewhere around here, whatever value your ATR gives you, or maybe like a 4-hour. Then most likely the price will not raid you. And if price raids you at that point, most likely the market won't go back in your favor anytime soon. So at that point, you're much safer. Okay. And then you take that trade. So for NZD-CAD, I'm just going to say, wait till Wednesday or wait till Tuesday evening. See where your entry is going to be. And then what happens is, once you know that entry, just have your stop loss in place from your ATR value. So ATR value on 4-hour times 1.5 will do the trick for you. You know where your stop loss is going to be. And in regards to take profit, you can exit on the 5th, but if you want to exit before then, you're allowed to. So if you don't like to hold the trade, for example, let's say you went in right here, you can take your first profit at your 4-hour time frame, which is 35 pips. So if you went in somewhere around here, you can take your first profit at 35 pips, right around there, 35, and then your second profit at ATR times 1.5 pips, and then your third profit, just let it run. Okay, it's easy that way. Yeah, that's also a brilliant idea. I mean, there's so many ways to approach the technical aspect of it, and there's just one of them we're touching on right now. So you can use, apologies, I'm just pulling out the thing. You can use average wick indicator, which on a daily you just calculate the wick size, calculate the buy wick size, and if you know the buy wick size, then on Wednesday, all you just need to do is wait for price to pull off to the average that you've calculated, and around that zone, look for your entry, then set your stop loss at the ATR value, ATR times 1.5 value. At that point, you even stand a lot more better chance of not getting rated out of the trade. And once you've started trading, Don't baby your trade and sit and look at it. Just let it roll. Just let your trade roll. You don't need to do much. Just let it keep rolling, and then you come back and take a profit, because sometimes it will come into your, it will go against you. And but if you're babysitting it and you're looking at it every single time and you're touching it, you're resetting your stop loss and all of that stuff, you just end up getting rated, or you're adding more positions to it. Once you've entered your initial position, stop adding more positions if you don't have the equity to carry on. So limit yourself and discipline yourself to that. Okay. So I think that's all I have time for today, guys. Thank you for the suggestions. Thank you for the assets. Thank you, Mr. Jose, for pointing out, candle wick. Thank you, Mr. Biodo, and Alals FX. Pardon me if I say that wrong. Forward stem. Thank you. Thank you guys for attending. And these are the trades I'm most likely going to be looking at this week. I'll probably look at others as well. But if you need the two, grab it on the website. Have a lovely trading week, guys, and God bless. Good luck.